2016 was supposed to be a banner year for the banks, but a weak economy has been putting even more pressure on the industry. Fears of an economic slowdown based on market drops overseas and negative data we got on the services sector here in the U.S. drove investors into treasuries, pushing prices up and yields down. The yield on the 10-year treasury fell to its lowest point in a year. Now, that has a negative effect on the banks because that's the benchmark for mortgages and other fixed-rate loans. So while low yields might be great for consumers, they hurt bank profits and therefore bank stocks. If the slowdown does cause the Fed to hold off on more rate hikes, another potential benefit for the banks, that's going to hurt too. And then the icing on the cake, the fear that more energy loans could go bad. For all of those reasons, Paul Miller of FBR said it might take a while for investors to jump back in.
You got to get the 10-year to stabilize. You got to get energy prices to stabilize, I think, before anybody really comes in. If you have a long-term view, you can buy some of these things today and make a lot of money here. But right now, nobody wants to own these things.
In Europe, the problems are far worse. The Euro Stoxx 600 banks index down 23% this year as the lengthening recession makes more loans go bad. Italy, for instance, has 350 billion euros in bad loans. They're now offloading to private investors with government backing. In Spain, the Bank of Spain said bad loans fell to 10.3% of total credit in November, but that risk has the stocks of Santander, BBVA, all falling. The fear is there's more where that came from, and the earnings have not been reassuring to that end. Deutsche Bank has seen its market cap halved in the last year, and it's warned it'd see more than $7 billion in losses in 2015. Government-owned RBS said it'll post a loss too and pay more than $2 billion in a mortgage settlement with the U.S. Standard Chartered plans to lay off 15,000 employees in the next 3 years. So these deep restructurings, these bad headlines, it's familiar to U.S. investors because we went through it after the financial crisis. But right now it's hard for investors on both sides of the Atlantic to see a light at the end of the tunnel. For Nightly Business Report, I'm Kayla Tausche in New York.